Anyway, this is what I'm thinking. You're going to be hearing a lot in the next couple of weeks about breakouts, bottom fishing, short squeezes. They're all huge ways you can make money if you play it right. On that note, I want to bring in our next guest. Let me clear this for you. All right, joining us now, stock market mentor, founder, and CEO, Dan Fitzpatrick. Dan, in studio, great to see you.
Hey, thanks for having me.
So, let's just talk about some of the things I use coming into this.
Sure.
Even today, you can see where the larger tech names, mega cap names, giving a little bit back.
Right.
But the NASDAQ, the Russell making a move a little bit. You can see a little bit of jockeying.
Yeah, I think that the leaders are going to continue to lead. No question about it. You're never going to get fired for owning Meta or Microsoft. However, when we see this move in the Russell, as you mentioned, also the mid caps, the MDY, you see this broadening out of the market, and we're in this point now where finally the smaller cap stocks are starting to catch up, or at least starting to make their move, and I think there's plenty of room to go with this extra breadth that we're going to see.
Let's talk about one of the issues, folks, and you've heard a lot of people come on this show and complain about there's not enough participation. This is what they're talking about. These are stocks that were up for the month. You can see last month, by the end of May so far this year, hardly no stocks were up. This is the only time that we had just about 25-30% stocks that were up and the market was higher. So you can see what people were complaining about. What's your thoughts on broadening out this market? How much more does it need to broaden out to really break through?
Well, I think right now, we have 27% of the S&P in these 7 holdings, about 55 in the NASDAQ 100. So we definitely need more participation. If we see the mid caps continuing to run and the small caps continuing to run, that just by itself is going to broaden out the market, at least in the S&P. But we need to see some of these kind of under the radar stocks like you were mentioning start going. The same thing with stocks like AMD, other stocks in this software space. But most importantly, we got to see the industrials go, the banks go. We got to continue to see the home builders move. And when you see that kind of participation, you're going to see a broadening out of the market.
And does that also speak to the overall economy then?
Yeah, I think where we're at a point now is we're continuing to anticipate when the Fed's going to cut, or at least when they're going to pause. They have such latent data that we keep waiting and waiting and waiting for them to cut. I think if they start doing that, we're going to see the economy still weaken, because it takes a while for all those to work their way in.
And they're trying to get the equilibrium. That means they went too far in one direction, and they're trying to counter it.
They always do it. They're playing with delayed quotes. But if we start to see them cut, we're further enough down on the calendar to where the market starts anticipating actually the end of a mild recession before we even get into it. And so that is going to push the market higher. I don't think the economy is going to crater.
Let's talk about, you use the word delay. This is from FundStrat, right? Tom Lee, who's really a perennial bull.
Yeah.
So at the beginning of the year, there were only 2 firms that had the market, the S&P above 4,300, Deutsche Bank and FundStrat. Now there are 5 of them, right? But still, that means there's still 15 firms out there.
Yeah.
Are you a contrarian at all? I mean, I kind of like when Wall Street doesn't like the market. I feel better about it.
Yeah.
The only thing I don't like from my audience is that they got to hear the negativity all day long, and they hesitate or even sell what may end up being a potentially great stock.
I think with respect to the audience, the best way that I look at this is if people are negative, if analysts are negative, those are the built-in buyers. They haven't bought yet. And so when you see everybody being so bullish, the market's already moving. If you're not on that train, you risk getting in right at the last part.
And you would say that especially applies to Wall Street itself.
Well, absolutely. When you have so many analysts that are that low, they're going to start raising. And what does that mean? That means they're bringing their clients into the market. Funds and investors that actually listen to them are actually going to start doing what they say they're going to do. So I like what Tom Lee pointed out. I think we're going to see more upside.
All right, we got less than a minute to go. I wanted to just highlight one of the stocks that you like here, Monday.com. Talk to us about it, because one of the themes for the show last week is bottom fishing.
Yeah, I think, look, this stock is up actually quite a bit this year.
It's made a big move.
It has made a big move. And I wouldn't look at this as a timing call, hey, buy it right now, today. But if you want to look at the base over a long period of time, you see a lot of upside in this stock.
Prolonged base, that means the bottom is put in a way.
Yeah, what you need to see in a base is you see a lot of distribution at about the same level,
Right.
which means that there's accumulation. Finally, when all those funds have got that stock, they got to start chasing the stock higher.
No debt is phenomenal.
Oh, especially for a company that's only been public for 2 years, it's
Yeah.
only been out in the wild for 2 years, and they have no debt at all.
50% growth. No, not too early to talk about profits.
No, not at all, I think. I think with their debt, then that's the story that I want to see.
Right.
Because with the rising rate environment, with this expensive money, it doesn't matter to them.
Right.
And for a small cap company, that's huge. And it's also really tough to buy. 21 million shares.
Target 260. Love it. Love it. Dan,
Yeah.
thank
Hey.
you so much. Great having you in the studio.
Thanks for having me. I
All right,
appreciate
folks. Breaking news, the dangerous quality of air in New York City continues. Of course, this is due to that wildfire in Nova Scotia.